If self-insuring the risk for long-term care did not sound like an appealing option for you, don't worry, you have other options. And today we're going to talk about traditional long-term care. Don't forget that I have the link in the description below, and you can click on that link and find out the statistics for the cost for long-term care, not only for your state, but also the city that you reside in. Hi, my name is Darlene Hartman. I'm a CPA and financial planner with Money Concepts. For weekly retirement planning and annuity advice, be sure to subscribe to my YouTube channel. And don't forget to hit the notification bell so that you can receive notices when I post a new video. So let's get started on traditional long-term care. Well, I have been promising you that we would talk about long-term care. So today is the day. And I have invited a guest speaker, Jay Robinson, who is an independent insurance consultant with InSource, to help me provide you information on long-term care. So I talk to Jay anytime I have a client with specific long-term care needs, because he has that direct relationship with the insurance carriers and know the pre-qualifications that are needed for each long-term care product. So on that note, I'm going to introduce Jay Robinson of InSource and let him take the presentation from here. Good morning, Jay.
Good morning. Thank you, Darlene. So what are the 4 ways to prepare for long-term care? Well, 1, we can self-insure the risk. And we're going to get into each of these in more detail individually. But the 4 ways to prepare for long-term care in retirement is self-insure the risk, traditional long-term care, asset-based long-term care, and life insurance with a long-term care rider. Number 2, traditional long-term care. This is traditional long-term care has been around for decades, and many of you may have looked at this before or read about this, but this is long-term care insurance that pays a set daily or monthly benefit if those 2 of 6 ADLs are met. Remember, we looked at those activities of daily living. Long-term care insurance, whether it's this one or one of the future ones, if you meet 2 of 6 ADLs, it will pay out benefits after that time. It will generate an income stream when expenses are needed, when expenses increase because of extended care. So the policy with a traditional LTC, you will normally see it stated in a set duration. It could be 4 years, 5 years, 6 years. It could have a specified benefit pool. You might have $500,000 of LTC benefits as the amount that you could receive. Traditional long-term care has been out there for quite a while. There are pros and cons with this. Pros, this is like maximum long-term care benefit. It's almost like auto insurance. I'm buying this for one thing only. I am paying a premium monthly, quarterly, annually, and the benefit I have is long-term care coverage. That's the only thing that this does. It is a way to get the most maximum benefit for the premium. Many states have partnership programs. Traditional long-term care can qualify if you meet certain requirements. If you are married or in a relationship and look at traditional long-term care, you can get a discount even if your spouse is not applying for a policy as well. If you and your spouse are looking at a traditional policy together, there are some features like shared care benefits where you may each have, for example, $250,000, but if you spend through your $250,000, then you can tap into your spouse's portion for your care needs. You can add inflation, home health care. We're going to see a trend here. Home health care is added on most of these policies, traditional LTC being one of them. With traditional LTC, premiums may be deductible. And the other thing, unlike self-insuring, with a traditional LTC or the other options we're going to look at in the future, you would have access to a care coordinator. More importantly, your family would have access to a care coordinator. So whenever long-term care, extended health care is needed, your family, someone that loves you, will have someone that they can call to say, what do we need to do first? They don't have to go to the internet and type in, what is the first thing I need to do? they can have a quarterback to help coach them through the stages as care is needed. The cons. You've probably seen this in the news as well. These are annual premiums. Obviously, annual premiums compared to self-insuring where we wouldn't pay anything, we would be paying an annual premium to an insurance carrier. Traditional LTC also has the concern of future premium increases. There is no such thing as a premium lock on long-term care. We've seen some carriers over the last few years as life expectancy extends, as medical advances get better. We've seen traditional long-term care insurance carriers actually raise premiums for those reasons. With any form of insurance, you do have to qualify with underwriting. That means you may have to do a doctor visit or have labs done, but you would have to be somewhat healthy to qualify for one of these policies. The biggest knock on traditional LTC, along with the chance that premiums could increase, it is like an auto insurance policy. If I have a car insurance policy and if I never have a wreck, I don't need my auto insurance policy, right? I've had it, and that's great, but I've never had to pay for an expense of a car claim. And the same thing is with traditional LTC. There is no other benefit besides that monthly benefit. So if I never need it and I've paid premiums for 40 years, and maybe I'm one of the 30% that never need any form of care, there's nothing to show for it. So I've had the coverage, but there's nothing at the end. And lastly, claims process. This just means that the insurance carrier, as we look at any of these options, the insurance carrier is happy to work directly with the facility providing care. Claims process just exists because of that step alone. So I don't know if it really should be listed here compared to self-insuring, where you would be covering everything out of pocket and not having to work with an insurance carrier. Claims process would be listed as a con whenever it comes to any of these forms of long-term care.
So as my YouTube viewers know, they all know I love to ask questions. So Jay, I have a few more questions for you. So is traditional long-term care the only way to get asset protection with a state partnership program?
At this time, yes. And the primary reason of that is because it has just one benefit. And it's that monthly, annual, daily benefit. There's nothing else. As we look at some of the other features where there are more benefits, including life insurance, the death benefit is the reason why they do not offer state protection.
That makes total sense. And then one other question. So is traditional long-term care the most cost-effective way to get long-term care coverage?
As you look at quotes today, the answer would be yes. So as you would look at this policy versus asset-based or a life insurance policy, the annual premium, the monthly premium on this would be lower. And the reason is it provides just that care benefit. But you have to keep in mind that the premiums could increase going forward. Now, carriers today have priced products today that should be more stable because of the interest rate environment, because of life expectancy increasing. But we've seen carriers in the past increase premiums 2 or 3 times. So the question is, even though it might be the lowest cost today, if premiums would happen to increase in the future, what would that look like compared to some of the other options that are available?
Gotcha. Thank you. Thank you for providing answers to my questions, because a lot of times I ask questions and then don't provide answers to my viewers.
Absolutely. And with that, Darlene, I'll turn it over to you.
Well, thank you so much, Jay, for taking this time. The presentation was very enlightening and informative, and I appreciate you spending this time with me. And if you're interested in obtaining long-term care, no matter which option that we discussed today, be sure to click the link below to apply to become my client. And also, don't forget, if you like this video, give me a thumbs up, subscribe to my channel, and share it with your family and friends. Let's get the conversation started on how you can live your best retirement while not outliving your money.